opening welcome to the Japan Market Brief podcast for March 26. Today we are looking at why Japan's market paused after yesterday's rebound, why the yen is back at the center of investor thinking, and why Tokio Marine is the stock to watch. Today's headline: Japan's market lost momentum today. The sharp rebound from the prior session did not turn into a clean second-day rally. Instead, investors moved into a wait-and-see posture as currency pressure and oil-related uncertainty remained in the background. Market moves: the Nikkei 225 closed at 53,603.65, down 0.3%. Topics also edged lower. Dollar yen climbed to 159.35, up 0.4% on the day. The move in the yen was modest in percentage terms, but the level matters. Once dollar yen starts moving back toward the upper 159 range, the market quickly becomes more sensitive to intervention risk and imported cost concerns. That is why today felt different from yesterday. The previous session had the character of a relief rally, helped by some easing of immediate Middle East stress. Today, that relief was still there, but it was weaker. Investors were willing to hold risk, not chase it. Oil, policy, and market tone. Japan also remained focused on the energy story. NHK reported that the release of state petroleum reserves had begun, with the government trying to support stable supply conditions. There were also ongoing headlines about fuel costs and the broader effort to reduce pressure from the oil shock. This is important because Japan's market is still being driven by external variables. It is not a session where domestic earnings optimism suddenly took over. The market is still reacting to the same three external forces: oil, geopolitics, and the yen. The difference is that on March 26, those forces were no longer intensifying all at once. That gave the market room to stabilize, but not enough to generate another strong upside follow-through. Stock to watch. Tokio Marine. Tokio Marine is the clearest stock to watch today. The reason is that it gives investors a very different type of Japan exposure from the auto sector or the oil-sensitive industrial complex. Recent reporting around Berkshire Hathaway's investment in Tokio Marine has put the insurer back in focus. This matters because Buffett-related buying is rarely treated as a short-term headline in Japan. It tends to be read as a signal about capital quality, business durability, and long-term return potential. Why does that matter in today's market? Because the broader tone is still cautious. Dollar yen is back above 159. Oil and geopolitical risk have not fully disappeared, and investors are still looking for ways to stay involved in Japan without simply buying high-beta cyclicals. Tokio Marine fits that need well. It is a large-cap financial, but not one tied only to domestic rates. The group has substantial overseas operations, especially in the U.S., and a reputation for strong underwriting and capital discipline. That makes it easier to frame as a quality compounder rather than just a local defensive trade. It also gives the market a cleaner alternative to the stories that have dominated recent sessions. Instead of talking again about autos, Middle East export exposure, or aggressive AI infrastructure bets, Tokio Marine lets investors focus on capital strength and business quality inside a still uncertain macro environment. So Tokio Marine matters because it helps answer a key market question. When the rebound loses momentum, do investors rotate into quality financials, or do they pull back from Japan risk more broadly? What to watch next? There are three things to watch from here. First, whether dollar yen stays calm or pushes higher. Second, whether oil market stress continues to ease. Third, whether investors start treating yesterday's rebound as the start of stabilization or just as a technical bounce inside a still fragile market. For now, the market message is fairly clear. Japan is no longer in the same panic mode seen during the sharp oil and war shock phase, but confidence is still thin. The rebound needs confirmation, and Tokio Marine is one of the cleaner names to follow as that confirmation test plays out. Closing that is your Japan market brief for March 26. The market paused, the yen moved back into focus, and Tokio Marine became one of the clearest names to watch as investors weighed Japan's short-term macro stress against higher quality financial exposure.